Good morning, everybody, and welcome to the morning volatility report. As I am Joe Nally, Chief Operating Officer for OptionPit.com. Mark is on assignment. Hey, all this volatility got you down. Well, we have a webinar for you Thursday. 1-hour webinar for free, understanding VIX, some intro to the VIX ETPs and trading volatility in general, how volatility moves up and how it moves down, structure the VIX and futures, using the VIX ETPs like VXX and UVXY intro. And again, use the market indicators that we use, the market indicators that we look at every day, just to help us kind of manage and create trades based on conditions. All right. This is almost full, by the way. So just in case, it's free. It will fill up, so sign up. Okay. If you get kicked out, we'll put you on the list for the next one. Okay. And then after that, on September 12th, we have a vol and VIX primer, which will be the next iteration of this as far as position structure goes. And then we'll be running a boot camp on September 30th through Saturday, October 3rd. All right. And with that, again, Mark here, idea he likes, selling out of the money puts in the SPY to finance long calls in VXX. I don't think it's a bad idea. We'll be talking about that in the chat today. That was a blog yesterday. Basically, the only thing that seems to work is what? Right? We have a market. The more we were talking about in our pro chat last night, the more I'm thinking about it, the more we are looking at the Fed meeting on September 16th. I believe that's the day where they start talking about it. That might be the beginning of the end of the volatility that we've been seeing. No guarantee. Okay, no guarantee at all on that. A reason being is the Fed's going to we're either a month of, zero rates, or they're going to raise a quarter. Nobody knows exactly. Most part, we're thinking it's only a small percentage chance. But I think right now with the telegraph of no stimulus, whatever there is, there's not that underpinning for the market that there usually was. I think we're rallying today on ECB potential stimulus. I don't know what the Europeans really are going to do more than they're already doing, but that was the jawbone that was taking us higher. And I think that certainly has it has a lot of potential. However, them talking about it and us actually holding one of these rallies are two totally different things. So if I look here at VIX, what has been happening? Let's just look at a couple of numbers here. All right, VIX is down on a rally, on our straight rally. The futures, as I look down, SEP future down $1. It was down more this morning. OCC future down 52 cents. This is not a market that is, giving up the vol. Okay, I will let people know, Robert. So, I think if we're looking at a trade like that, we'll start to price, I think, some SPY puts versus VXX calls. See if we can come up with a financing play that works pretty well. Because of where the vol is, the volatility is very high. You get a lot for SPY put spreads at this point. We'll take a look in the chat. As far as individual issues go, individual ETFs might have a shot. Like the financials have looked okay. They will probably do a little better if the rates get hiked. But individual issues are just, volatility is very high, and unless you really know how to structure something around the money, I think any of that stuff is really difficult trades. Maybe with Apple being the exception of, selling some 90 puts or lower 85 puts. But earlier this last week we saw 75 puts and 65 puts for the bid. So it's tougher for me to do that. All right. So again, from a vol point of view, I think you're looking for finance vol plays. Look like a good idea. Are we really going to see 1800 or lower? It doesn't look like we're getting back to those levels. But it also doesn't look like our intraday volatility and our close-to-close volatility is over either. All right? And I will check on the link. And with that, I will see everybody in the chat later today.